Good morning and welcome to the SYS Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Adam Binks, CEO. Good morning to you, sir.
Good morning, everybody, and thanks for joining us once again for SYS Group's full year results presentation for the financial year ended 31st of March 2022. Just for those of you that don't know, as I'm sure many of you on the call are familiar with our faces and sick of seeing this slide now, but I'm Adam Binks. I'm the Group Chief Executive, and this is my colleague, Martin Orton, who is our Chief Financial Officer. Again, for those of you that are new to SYS Group, what I'll do over the next couple of slides is take you through who we are, and what we do. So apologies to those of you that have heard this before, but I think it's always a good introduction for these things, especially for people new to us. So SYS Group PLC, we are an AIM-listed managed IT services, cloud hosting and managed security services business. We are operating 6 offices now across the country. Headquarters is in Liverpool, but as you can see there from the right-hand side, we've 5 other offices. Our newly opened office in Manchester, which we opened last year. Technical Operations Centre down in Newport, and new additions to the portfolio being Edinburgh and Bristol, which have come from the acquisitions that we've made earlier this year, and obviously I'll talk more about later on. So just a quick overview. The results we've posted: 14.7 million revenue, which is down on previous periods, but we'll talk about that more as we move through the slides. Solid adjusted EBITDA of 2.8 million. We're now looking after more than 900 customers in the mid-market through up into enterprises. We've strengthened the team further with 120 team members spread across those 6 offices that I mentioned earlier. And we're operating the business on a true 24/7, 365 basis. So we're always available for our customers. You'll see a number of logos over on the right-hand side of the slide, many of which I'm sure you're familiar with. But this just demonstrates the caliber of vendor partners that SYS Group is working with on a daily basis, and also demonstrates some of the barriers to entry for becoming an MSP. So it's really, really important when customers look to contract with an MSP and outsource their IT services. They want to see these logos as true partner accreditations because they typically know that we are invested with the partner and the partner is invested with us. So it's not as simple as filling out a form on Dell's website, for example, and becoming a Dell partner overnight. We need to have our technical teams and our sales teams and our pre-sales teams all accredited with the technologies that each of these vendors provide, to show that we are well versed and technically competent in being able to deliver these solutions for our customers. And obviously the accreditations piece, we're big on accreditations. We operate the company and our processes to a very high standard, having ISO 27001 and 9001 on there. And obviously the one that I always say I'm most proud of is our PCI DSS compliance, where we meet Visa Level 1 merchant service provider status, which is fantastic. And there's only about 3 other service providers in the country that have that accreditation. So that's a bit about us. So in terms of our capabilities, cloud is the latest and greatest, is the next big thing. The pandemic has helped business leaders understand that they need to make the shift and the transition from on-premise infrastructure and outsource their IT requirements to businesses like SYSGROUP, which are managed service providers. So we operate our cloud hosting platforms from 5 key locations in the UK. The building that you see in the picture on the right-hand side there, which is Vantage's data centre down in Newport in South Wales, that really is the building. That's the data centre. It's not a stock image. Fantastic facility. And it's also where Microsoft hosts their UK Azure presence from. So we have a footprint in there of about 120 racks worth of infrastructure. We connect that up through our core network, which I'll explain on the next slide. And you will have seen in our announcements that we've recently invested in our SYSGROUP platform, which is our multi-tenanted hyperscale cloud hosting platform, similar to that as an AWS or an Azure. We host the main part of that from that facility. So fantastic, fantastic building, extremely secure, 100% uptime, well backed with great power supplies and generator backups in the event of power failure. You know, I hate to talk about it, but touch wood, we've got 100% uptime on the platform there. And then our network spans right across the UK. So, you know, it's important that we connect each of these data centers by means of high capacity, low latency connectivity, and then that we're able to connect our customers' premises, be it their head offices, their satellite offices, their branch offices, into our network to be able to bring their connectivity as close to the data center as possible, where their applications and their data are stored and hosted, giving that real-time user experience and reducing latency to an absolute minimum. So you'll see, you know, there's multiple connectivity points there. We run a diverse, redundant network around the UK, all running at 10 gigabits per second at a minimum and utilizing multiple different service providers. So we've got no one single point of failure in there. Again, being able to provide 100% uptime for our connectivity customers and keeping them connected to their applications within the data center. So in terms of what we do as a business, we split our service offering down into these 7 key areas. You know, recently we did an analysis in our business of our existing customer base and what the existing customer base buys from us. And on average, our customers only buy from 2 of each of the 7 sections there on that slide, which demonstrates that we've got a huge amount of white space in our customer base and great opportunity to go after in order to return to organic growth in the future. But you'll note I've used the word managed an awful lot on this slide. Everything starts with managed. We are a managed IT services provider, and that's where we add our value by being able to take away the pain for a customer or a prospect and manage each of the services listed under these headings and look after this on a 24/7, 365 basis for our customers. So you'll see the product or the service portfolio is vast there. There's not a lot that we don't cover, especially since the acquisitions have come on board. We've even further strengthened the service offering so we can go deeper, especially in the managed security section of this slide. So a real full breadth and depth of services that we're able to offer to our clients. And in the market, you know, what is our go-to-market strategy? So the biggest opportunity for SYSGROUP, we focus on the UK mid-market. We don't specifically focus on any one vertical. However, the verticals that you can see listed out in this slide over in the top left there is where we have got quite a bit of demonstrated success. So we're well versed at being able to go into prospects in those verticals and give them real life case studies where we've worked with businesses similar to them in the past and currently. So the biggest opportunity for us sits within that UK mid-market, kind of ranging right down the bottom end from 50 users up to 1,000 users plus. That's not to say once we get to 1,000 users that we don't want to deal in that area. In fact, we absolutely love dealing in the enterprise sector. However, the opportunity just becomes less because there's less of them. In terms of our marketing strategy, we're very focused on who we market to. It's all about knowing your audience and how to talk to them. So again, just in the table in the bottom left-hand corner, we give examples of how we message our marketing collateral when targeting the different areas of the C-suite, if you like. And then the table on the right-hand side shows all the different methods that we use to get our reach out there and how that goes through the funnel. So there is there's no secret formula, there's no magic wand. We have to have multiple touch points within our business to get the reach out and get the name out and get the service offering out there to our prospects and help them understand what SYSGROUP's capabilities are. And obviously, the further we move across that journey, the thinner the funnel becomes. Unfortunately, we don't win everything that we touch, although it would be great to do so. So that's a bit about SYSGROUP. We'll focus now on the FY22 period. I'll shortly hand over to Martin for him to give us an update on the financials, and then later on in the presentation, I'll give you an update on the acquisitions. But just taking the highlights from FY22, whilst we've had an impacted revenue down to 14.7 million, we've still delivered a fantastic EBITDA outturn at 2.82 million. And Martin will talk to you more about the revenue decline and where that's come from and what that's about, and why it's not a huge thing to worry about. But again, net cash ahead of our own expectations at 3 million, which really demonstrates the strength of our business model, that we are turning EBITDA into cash. We're ahead of last year on both adjusted and basic EPS, which again is great news. You will have heard me talk in the past about Project Fusion. Project Fusion was the program that ran through our business for the last couple of years to unify all of our systems and platforms, CRM systems, billing systems from the previous acquisitions into a single business operating system. So Martin and I and the rest of the management team now have a single pane of glass to get business intelligence from and to manage the business. And that project has been really successful. Our teams have welcomed it, but that's now complete as of the 31st of March. So, in future slides, you won't be hearing us harp on about that anymore. Being a good corporate citizen that we'd like to be, we've embarked on an ESG project this year, which Martin has led and done a fantastic job on. We're not mandated to make any ESG disclosures, but we think it's a good thing to do. And again, Martin will take you through the ESG journey shortly. Last year, middle of last calendar year, we opened up our new Manchester office where we've built a focused sales and marketing hub. That office is now fully operational with a team of people in there working since January of this year, which is great news. We're starting to see very small green shoots of success come out of there. And I stand by the decision that we made last year to embark on that journey. It was the right thing for us to do. And I think in future periods that will really start to bear fruit for us, which we'll be able to update on. We've gone through an office consolidation process. We've closed down one of the legacy offices, which was our Telford facility, which was also a data center facility. We were still running customer infrastructure from there. That's been in the planning for around about the last 12 months or so. That is now complete. That office is fully closed down. The data center has been migrated into our existing footprints within Vantage and LDEX on our SYS cloud platforms, which is great news because we've had some operational cost savings that have come from that, albeit largely offset by increased power charges, but a good time to complete that project. And obviously the big piece of news is the post-period acquisitions of Truststream and Orchard, which we did in April. And as I say, further on in the presentation, I'll give you more of an update on those two businesses. Martin, ESG.
ESG. Okay, thanks, Alan. So ESG was something we thought about 12 months ago. So if if any of you were on the call, certainly at the interims, potentially at last full year as well, it was something we've listened to from our shareholders, that they're quite keen for us to get involved in this. Adam's mentioned already, this is purely voluntary. We're significantly under the size thresholds to do it. But essentially we think it is the right thing to do. And I say that in terms of talking to our people as well internally, that they're very keen that we got on and did the ESG piece as well. So whilst regulation might be coming down the path in future, it was definitely something we wanted to get on board with this year. So the key thing is we've partnered with a company called Inspired, a fellow AIM-listed company. So Inspired have a specialist ESG division, and they've walked hand in hand with us through this project this year. And what we have is we're making full disclosure this year of our carbon emissions and our full social governance side as well, as a baseline year one. So what you'll be able to find today, if you go onto our website, you'll be able to find the ESG link and find a report that you can see on ESG. That will actually be followed up when we come around to put our full annual report on our website with the full ESG report, which is likely a 50-60 page summary. So it's a good piece of work, well done. Our senior leadership team involved in this, and our wider team. Our carbon emissions are pretty low for those who are interested in this. We're office based, but we do use obviously data center energy for our scope 2, so that's captured in the carbon emissions. But the next year we'll be looking to set KPIs and measures and metrics for this. But I'll move on to the financials. So this is just a highlight slide for you, and I'll talk a lot more on subsequent slides, which talk about the income statement in more detail. So revenue is down this year. So if you look at the graph to the right, what you'll see is we've had a good few years of growth, and what you're really seeing there is the 2 years of the pandemic impact, unfortunately, which obviously many businesses and the economy have faced. I'll talk a lot more about revenue on the next slide, if you bear with me, in terms of constituent parts of that as well as margins. But just to pick up a few other points on that slide, the adjusted EBITDA, we've been very pleased to be able to essentially maintain a good adjusted EBITDA level despite the revenue decline. And obviously we've got these small tick ups in the earnings per share, which is good to see. So income statement, again, I'll take the point that some of you maybe on this call who haven't looked at SYSGROUP before. Our revenue, you've already seen a slide from Adam which talks about the managed services. That's about 80%, and we target around 80% of our revenue to be what we call contracted income or managed services. And to put a little bit of a sort of finance spin on that, what's that mean? It means contracts that new customers will sign up to for 36 months and then be on an automated 12-month rollover. They have 90 days notice to give us at the end of the initial term, but essentially they don't give us notice, it rolls over. That is billed on a monthly or quarterly in advance basis. So that's why when we come to the balance sheet and the cash flow statement, our debtor days are about 25 days, so it's in a very good position. The other 20% of the revenue is what we call value-added resale. And value-added resale for us is point of sale licenses and IT hardware. So essentially this is where we have customers who are taking contracted services from us, and they want us to do the procurement of the equipment and licenses for them as well, and that's one-off sale. Now the key thing here is that the margin for managed services on a blended basis is around 60 to 65%. The margin obviously on resale is 20 to 25%, so there's much richer margin and stickier margin in the contracted services. Kind of leads on to the revenue decline, just to cover that point. So £2 million of the difference between FY21 and FY22 revenue is value-added resale. So that came down to 1.9 million in FY22. The key point around this is, as you probably have guessed, in the COVID period, we saw lots of customers wanting to withhold CapEx spend to preserve the strength of their balance sheets. What's also happening at the moment, which we're seeing a lot more of in talking to customers, is that customers are now thinking about the cloud transformation. So the old style of equipment by put it on premise is now moving into a lot more customers thinking about the cloud transformation. So we think value-added resale long-term will be on a decline, but clearly from our own business model, having that move into managed services and cloud hosting is beneficial. The revenue for managed services is down about 10% year to year, and that was really from, again, a pandemic impact of quite frankly, higher contract churn and customer churn, and again, on basis of saving costs in the pandemic. Q4 going into FY23, we're now seeing that the green shoots of that growth, the interest in the customers coming back in. So the revenue mix in FY22, 87% managed services, 13% VAR, isn't really normal. That's all to do with the VAR lower sales value. We'd expect that to come back to 80-20. Similarly, that's how you should understand that gross margin. 58% in normal model is about right. 61% is high because you've got that revenue mix change. Overheads, what we've had in the year is we've got the headcount in our business down to the right level for the size of revenue we have. So most of that overhead saving is through sort of late maturity acquisition synergies of people leaving and not needing to be replaced. What will happen in FY23 is we'll be recruiting more and bring it up to reflect the higher revenue level we expect. Just again, for anyone who's not touched SYSGROUP before, no use of the furlough during the COVID period, no government support required, and no one-off items in profit at all. So a good clean set of numbers to have a look at. So in terms of balance sheet, I always say this, and I think it's a good point. It's a very simple balance sheet to understand. We're an M&A buy and build business, so naturally we have the intangible assets and goodwill as you'd expect as we make each acquisition. What the real interest I think in the balance sheet is around working capital. So we've got strong cash balance at the end of the year. Again, I'll talk a little bit more about that on the cash slide. We are a very high cash generative model. In the fixed assets, we've probably spent more capex this year than we'd normally do, but that's principally because we've invested in our offices for refurbs and fit outs. So 300k has gone into that. We've also invested into SYSCloud 2, which Alan mentioned, about 130k. And in terms of Fusion, we've had development costs for Fusion, which again have come to an end in March. But really, Fusion's been an excellent project for us. It's been really important to get that unified platform in because we now bring all our newly acquired businesses onto that single platform, which is quite imperative for us. So probably worth going to the cash slide. So overall, net cash is up to 2.99 million at the end of March. So that's 1.1 million higher than 12 months previously. We target 80 to 90% cash conversion, and that's measured as the cash from operations after working capital movements over adjusted EBITDA. We've hit 88% this year. I think if you go back the last 3-4 years, you'll find we're always in that or above the target range. So, and this comes through because of our billing in advance. We're providing critical services to customers, so we typically don't have customers who kind of don't pay us because clearly we're giving them quite key supplies. The capex I've mentioned already, which is fairly straightforward. Mention on the bank loan, that's ticked up a bit from 220k to 417. That was just in the third year of the banking agreement, the quarterly fixed repayments just go up, so that's as anticipated. But it's a strong model, and we've got 4.1 million cash balance at the end. And in fact, our cash generation previously and actually at the year end has enabled us to use some of that cash to buy Orchard, which we'll come on to. So just flip to, and maybe this goes slightly beyond the year end now in terms of April. And links to our acquisitions. So at the same time as we did the Truststream acquisition, we've agreed a new 8 million revolving credit facility with Santander. So we've been with Santander for a number of years. They've been a very supportive banking partner and seen us grow over these years. So the 8 million RCF is a acquisition fund, and it's also for working capital purposes. We are highly cash generative, so it's very, very unlikely we'd ever need to use this for working capital, but it's just nice to know if it was needed. The terms of 5 years, we've got some good, very fair covenants. We're about 1.5 net debt leveraged as of today, following the drawdown for Truststream. And in terms of minimum liquidity, we're around 6 or 7 million in terms of that balance. So against the 2 million minimum, we've got very high headroom. So in terms of this facility, we use 4.5 million immediately for the Truststream acquisition, which I know Adam will talk about in a moment. But we also folded in 800k of the outstanding balance on our previous senior term loan. So that's at 5.3 today, which leaves us 2.7 million of headroom, which together with our cash balance does actually allow us through the balance sheet and through the facility to probably do another smaller bolt-on acquisition just within the existing capability. So in a very good cash generative position and a strong balance sheet position.
Very good, thank you. Okay, so I'll move on to talk about the 2 acquisitions now before we move on to Q&A. So Truststream was the first of the 2. We acquired Truststream at the start of April, a managed security services business that's been established for just over 11 years, founded by 2 shareholders, both based in Edinburgh, who have joined SYSGROUP and will remain with SYSGROUP certainly for the next couple of years to deliver the earnout for us. Truststream operates more at the higher end of the mid-market and into enterprise customers. So you've got some fantastic names on there, like Tesco Bank, My Dentist, and DVSA, amongst many others. It's really enhanced our existing security offering. So SYSGROUP was in the security space prior to the acquisition of Truststream. What this has done is really bolstered our position as a provider of managed security services, and also give us 2 new strategic relationships with Zscaler and CyberArk. So Zscaler is one of the industry leaders in cloud-hosted endpoint protection, which is really, really relevant at the moment, given arrangements for things like hybrid working, people working from multiple offices, and people even working from coffee shops and from home these days. So Zscaler is a great service offering, and we've got a great relationship with them, which is being filtered through into SYSGROUP. And against CyberArk, an industry leader in what's known as privileged access management. So, without boring you guys with the technical details of all of that, what it does is simplify the process for a business that has multiple systems and multiple tiers of staff that need to access those systems without ever the need to give out the password. So when you have things like people leave a business or changes in role, there's no mass need to go out and change all the passwords on systems. By the click of a button, an individual can be locked out, or their privileges can be lowered or hired as and when required. So again, another great service offering to add to our portfolio. We acquired Truststream for what I think is a very modest 6.4 times FY21 EBITDA of 4.8 million. Even if the guys deliver the targets that are within the earnout, we'll keep that multiple depending on where they land, sort of between 6.1 and 6.5 times, which again, I'll say again, for a managed security business, it's a really good deal that we've got there. And Martin talked earlier about integration and Project Fusion. Previously in the past, when we've had earnouts around because of the way systems work, it's taken us years to do integration. Now, the way we can segregate systems but still be on the same platform and have the same access to information and reporting, we can integrate the businesses rapidly, so it takes months rather than years. And we expect to be coming back on both Orchard and Truststream when we do the interims update in November. Either that we're very, very close, or both of those integration projects are complete. So then moving further south down the country to Orchard, a business based in Bristol, established for some 30 years. Very loyal customer base. 20 team members added to the SYSGROUP business. You know, you might look at this and say, well, it's a really small deal. Why did you do it? And there's a couple of reasons. One, we got a great deal on it. We paid 3.3 times FY21 EBITDA, so it cost us £1 million. But one of the other reasons, you know, we've got an operation in Newport in South Wales, and that's where the majority of our technical people are focused. But we've also had, you know, same as any other business, across multiple sectors, not just IT, recruitment issues in that area and across other parts of the business. So what this has helped with is by bringing in an additional 20 team members, 18 of which are technical. We've almost solved the recruitment problem that we had in that area, if you like. And the MD of the business, he has stayed with us. He's taken a role within our existing sales team, which provides continuity to the Orchard customer base. And we've actually already got the cross-selling opportunity underway with the Orchard customer base by introducing them to the SYSGROUP portfolio. So, you know, a small bolt-on acquisition, as I say, I'm going to say it was a bargain at 3.3 times, costing us £1 million. And again, bringing on a fantastic team of people that helps us accelerate our journey. So really pleased with that deal, and another great one to add to the portfolio. So look, reasons to invest in SYSGROUP. We've got great visibility of future revenue, which is underpinned by contracted income. Many people talk about recurring revenue. When we talk about it, we talk about recurring revenue being underpinned by a contract. Not just repeat business that keeps on happening. It truly is contracted income. As Martin's explained, we've got very strong cash generation. We're operating at the upper end of our own targets and probably upper end of our peer group, which is great. We've got a supportive institutional shareholder register, and despite the delays that we've faced through COVID and the pandemic, they are still well and truly on board with us, all of which hold a medium to long-term view on their investment. We've demonstrated success with our M&A strategy. I think we've definitely demonstrated our ability to source good businesses, buy them at good value, and then integrate them into the wider group to continue to operate those businesses with success. And we're operating in a growing market, which has got great future demand. You know, the pandemic has really helped demonstrate the relevance and the reliance on IT. People have realised the complexities of IT and therefore understand that in order to evolve within their own businesses and employ technology correctly, they need to rely on businesses like SYSGROUP, who have the technical expertise to help them navigate the complexities of the technical landscape. And you've got a leadership team, Martin and I, our senior leadership team, who are committed to success. You know, it'd be very easy to become disheartened with the wider market, with the challenges that we faced, and also with the share price. But you know, we understand it's bigger than SYSGROUP. We're still committed to driving this business forward, and we're going to take it to where we need it to be. Thank you very much for listening, and we've got some time for Q&A.
Adam, Martin, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the top right-hand corner of your screen. But just while Adam and Martin take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Adam, Martin, as you can see, we've received a number of questions throughout today's presentation, and thank you to all the investors for submitting those. Could I just ask you to read out those questions and give responses where it is appropriate to do so, and then I'll pick up from you both at the end.
Yeah, fantastic, thank you. So the first question we've had in, you say that M&A is picking up. What metrics do you use to make acquisitions, and does this pickup make it more competitive? It's always been competitive. You know, there are a couple of us out there on the M&A journey. In terms of our metrics, we have a very strict criteria, which I'm not going to talk about in full because, you know, part of it's sensitive to us. But one of the key things that we look for is recurring revenue, and what I was talking about earlier in terms of contracted recurring revenue, or how we can drive contracted recurring revenue and accelerate it through an acquisition target. We always look for businesses that are growing, so we don't claim or profess to be turnaround specialists. We're not looking for businesses that are in a loss-making situation where we can come in an asset strip and turn those profitable by largely getting rid of people, because the biggest costs in businesses like ours are people costs. So you always need the people. Hopefully that answers that question. But you know, M&A is big for us. It feels like it's back. It's been a delay for the last sort of 2.5 years, not doing any deals. So it's great to have done 2 already this calendar year and this financial year. And you know, as I always say, there's a consistent pipeline of opportunity that we continue to assess. The next question is, how are you managing the well-documented IT skill shortage in the UK and the recruitment of talent? Also, increases in wage inflation. So the IT skills shortage, I think, relates a lot more to businesses outside of the technology sector. You know, let's use an example. You're a bank, for argument's sake, trying to attract IT people into a banking environment. I think that's more where the struggle is. We don't really struggle on skills. We've got 75% of our workforce now is technical. We have a huge number of skills across the business. We've got some really talented individuals that work for us, and we're aware of that. We notice it. We know who they are. We look after them well, so we retain them. So we are retaining top talent within our business. With respect to wage inflation, we've put through a pay rise already across the board in our business. We did that at the beginning of the financial year in April. We also did it in previous COVID periods, so we didn't stop because of COVID, which has been well received by our teams. So, you know, it's difficult to answer in the short term, have we tackled wage inflation? I'm not entirely sure, but we're definitely doing our best as a business to recognise our people and make sure that we look after them well.
Adam, let me just add on that as well. I think one point I'll just draw on wage inflation is, in terms of within our organisation at the moment, I'd say we haven't got any wage inflation pressures, because of the wage rise we put through in April was well received in our organisation. And I mentioned there, with 2 acquisitions we've made, we put early pay rise into those 2 teams as well. So there's no internal pressures. I think that where we'll get it a little bit is probably on further recruitment going forward. Obviously, it's a candidate-led market at the moment, so that we might be looking at sort of high-cost people to recruit. But in terms of our organisation at the moment, I'd say we're doing well.
Thank you. The next question we've got with Truststream, what scope is there to cross-sell? Hopefully I explained that in the slide where I talked about Truststream. There is a huge opportunity, I think, for us. So if you bear in mind that Truststream is very focused just on managed security services, that gives them a relationship with their customers, but only for one piece of the pie, if you like. If you go right back to sort of slide 3 or 4, where I showed the whole service portfolio that SYSGROUP can offer, we've got the ability to plug into those customers now to talk to them about the bigger picture and being part of SYSGROUP. So I think we've got a great opportunity to cross-sell and upsell that. Next question, and probably the final question, given the current share price, will this, I think that's supposed to impact on your ability to make further acquisitions other than relatively small bolt-ons for cash? I mean, this is a really good question. So I think the underlying question is there, would we like to do an equity raise at our current share price? And the answer is obviously not. I don't think many people want to raise money in equity capital markets right now, given how tough it is and where their own share prices sit, and we're no different from that. However, we are being strategic about the opportunities that we look at, and we are making sure that we can either fund those opportunities from the existing balance sheet and our existing resources, or where they make sense to be able to scale up the RCF, if you like, by the addition of the EBITDA that comes through into the business post-acquisition. All that said, if an opportunity came along that was, extremely transformative to the group, and it really made sense to do it, and in the end it would end up accretive, by all means we'd look at that, and we'd take that to the institutions to get their view and see what the possibilities of a raise was to support such a deal, because it's opportunities like that you don't want to miss, although they're few and far between. But I think the short answer is yes, we're looking at opportunities that can be funded from our existing resources or through additional drawdown on our debt capabilities. Right, I'll hand back over. Thank you very much.
Adam, Martin, thank you very much for that. I think you have addressed those questions you can from investors, and of course the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Adam, could I just ask you for a few closing comments?
Yeah, look, thank you everybody for taking the time to join us today. It truly is appreciated. I know a lot of you have given up your time when the weather outside is fantastic, and we look forward to updating you further on our progress in November.
Adam and Martin, thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few minutes to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SYSGROUP PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.